Welcome back to the Dividend Diplomats YouTube channel, guys. You've got your boys, Bert, the Hurt, and Lanny, the Dividend Diplomats, guys, the best dividend investing channel here on YouTube. And today we're talking about not one, not two, but the trifecta. The trifecta in a certain industry. See if, hey, is this the beat industry right now in 2024? Or one of many? And are any of these stocks that you own in your stock portfolio? And is there any, after looking at the metrics, that you would buy right now? Can't wait to dig in.
Oh yeah, Lanny. Gotta subscribe to the channel. Give the video a thumbs up and remember, like your boys, the diplomats.
Oh man, the cream rises, huh, Bert?
Yeah, cream rises. I couldn't get that one out. I was out on my Macho Man impersonation. I need a little more water. I got the flick though.
You
So,
got the flick in.
all right. So just in all seriousness, don't forget to subscribe, like the channel. Let's talk some utility stocks today.
All right, you piece of trash. All right, no, I'm kidding.
Yeah. Hey, take it easy. Take it easy, Lanny. Come on.
Guys, thanks for rocking with us here again. Sunday morning, get your coffee. Let's get it flowing, guys. No coffee, almost 2 months strong. Ooh-wee, man, oh man. Energy, though, guys, energy. And that's what we're kind of talking about. We're talking about the utility industry that does provide energy for your house. That was a very terrible segue. So,
Is this
oh
a
man,
better segue?
no, no, not the chair. Uh, But yeah, we're talking about utilities, guys. We're going to talk about the utility industry. They're kind of like this fixed income stock that might grow with inflation, presumably. They usually yield pretty high above average yields. When you think about the stock market usually yields around 1.4 to 1.6%. Utilities usually yield about 3x that. At least that's what you kind of want. Because they're not going to grow as much. They're kind of slower growers, guys, because they're not slinging deals. There's a lot of input cost to the output to the consumer, providing electricity and energy to the grid, and
Yeah.
all of us consuming from the grid.
Yeah, there's a lot of regulations in the sector, a lot of price caps depending on the state. Like there's a lot that prevents them from exploding their revenue and not having costs go up with it. I had to
And
make
keep
sure to
in,
quickly say revenue after exploding because we have had a few instances of utilities gone awry.
oh, yes, we have. Now, they typically have higher dividend payout ratios because, hey, what are we going to do with our earnings? They typically do pack on a lot of debt because sometimes that's how they grow. They borrow, they do bonds, they do notes, and they just try to, grow their infrastructure. They try to merge maybe in another utility company that's struggling. But no matter what, energy needs to get to the grid. So, like, the industry is fairly recession proof.
Hmm.
One of these stocks on this list today, you might even be paying a bill every month to them. So might as well pay yourself in the form of a dividend
Yeah.
with by owning a utility player.
I had to think about it, but yes, I do pay through one subsidiary of this one. There is yes on the list.
And yes, you do.
Yeah.
I may be paying both. Um, you know, but
All
because
right.
let's
Utility
get into
stock.
it, guys. Yeah,
Utility
let's get into
stocks.
it. Yeah.
We're really positive to start with this while we're talking about the utility company.
Again, if you guys own a utility stock, electricity, energy, natural gas, let us know in the comments below which one is your favorite. What is your go-to that you buy at a certain price? Let us know which ones you're stacking. We're getting into three stocks, guys. We're talking about First Energy today. We're talking about AEP and Duke Energy. Three stocks, two based in Ohio. Sorry, Duke. I know you're outside of Ohio, but we're looking at this with metrics as of February 22nd here, recording this at 10:06 p.m. We are burning the oil, recording it for you guys.
Yeah, now it's time for me to bring the energy here. So we're going to run them each through our screener, which has three metrics: PE ratio less than the S&P 500, payout ratio less than 60%, history of increasing dividends, and that bonus metric, the dividend yield.
The
11.
dividend yield, the lovely dividend yield. And we'll find out that a lot of these companies that we're discussing here today have a lot of the similar metrics. So that'll be fun.
Yeah.
Um, what we'll do, Bert, what do you think today? Should we go through one metric, all three stocks, or should we go stock by stock?
Hmm.
What are you feeling here?
You know what? Since we're not really highlighting one and going against the other, let's do metric by metric this time. Let's
Yeah.
change it up just so we can just get directly see how they stack up on the metric, see who wins, go to the next one, and then so on. Let's
And
change
you
it
know
up.
what? And let us know in the comments if you guys like this method too, and we have multiple stocks. But all right, Bert, let's get into it. The
Yeah.
price to earnings ratio, man. I'll start off with the acronite here with First Energy, ticker symbol FE. Right now expectations are $2.69 with a $37.30 share price, down 5.5% this year. P ratio below 14 at 13.87. How does AEP look?
$82 per share, EPS 560. That's a PE ratio of 14.64. Not that much higher, about what, 80 basis points, a little bit higher than First Energy. Tell us about Duke here.
Duke, knocking it out. Duke's a hazard over here. DUK, $92.13 share price, $5.60 as well on the expectations of earnings. Let me just double check that though, because it's like,
Give it that
dude,
discount, double check.
yeah, does AEP and Duke actually have the same expectations according to Yahoo? No, we're gonna change that to $5.96. That's what we gotta change it to.
All right.
So
All right.
it
So you got the instant fact check here for Duke.
is 15.46 PE. So similarly, about 80 basis points higher than AEP,
Yeah, so
and
first,
almost 1.6% higher than First
yeah.
Energy.
Yeah, so First Energy is the winner with the lowest payout ratio. AP's in second, Duke third. Let's go to payout ratio here. Lanny, why don't you tell us about First Energy's dividend payout
So
ratio?
they pay a 41 cent per share per quarter, $1.64 per year over that 269, 61% on the
Hmm.
payout ratio, just above the ceiling. But again, utilities typically are higher. I've seen them in the 70s just fine.
Yep, AP's $3.52 dividend gives them a 62.86 payout ratio.
Hmm.
Hmm.
All right.
Yeah,
Okay.
yeah.
Well, let's go to Duke here. $4.10 dividend, 69% payout ratio. So the highest of the three. Come on, Duke, the highest PE, the highest payout ratio. Are you going to make up some ground at some point?
Let's see. Let's go to that dividend growth rate here. First Energy's, I don't know if I'd call it a dividend growth rate. I don't even know if I'd call it dividend growth. They've increased it for 1 year after they had that dividend cut and just left the dividend flat. So it's
It
a
was five. It was a 5% increase last year.
yeah, 5% increase last year, 5-year average increase of 1.86%. So that's First Energy, everybody.
Yay. AEP though, which Bert owns a lot of. Let us know if you guys are AEP shareholders. 14 years of growing dividends have an average rate of 5.8%. Probably one of the most consistent
Very.
utility growers I've ever seen.
That's why I love them. That's why I love AEP. Let's see what Duke has. 5-year dividend growth rate of 2.13%. They've increased that for 11 years. So they've committed to the increase. They've increased 11 times. It just hasn't been for very much. It's only been a 2% 5-year average growth rate.
All right. Dividend yield. First Energy sitting at 4.4% yield right now, which is pretty nice. That actually compares favorably to the 5-year average of 3.89 or 51 basis points higher. So pretty good.
Yeah, yeah. AEP 4.29%. Yeah, I like it at 4.3% for AEP. What about Duke, Lanny?
4.45%. So they are the highest dividend yield
Yeah.
by 5 basis points.
Yeah, they're all pretty much in line with each other, though. With that, with AEP being the lowest at 4.29 and Duke the highest at 4.45, a very tight band there.
Very tight band, which is why it's fun here. You guys own Duke Energy because it's the highest yield. Let us know if you guys own Duke. Year to date, again, they're all down. First Energy down a little bit under a
Yeah.
percent, but down again 5.5% over a year. AEP, Bert, looks like they're kind of beat up the most.
Yeah, down nearly 10% over 1 year. First Energy's down 5.5% and Duke's down 4.86%.
Huh. Again, the best one that has the spread, their 5-year yield dividend average is AEP. They actually have a yield right now of 78 basis points above the 5-year average yield, partly because they are down the most since last year by about 10%. So
It's interesting.
long-term debt though, Bert. I mean, they're all rising in their debt levels on the long-term side. So
Debt rises, everybody. I'm kidding. Yeah, it's growing there. First Energy, 1.6 billion. AEP's long-term debt's increasing 400 mil, and Duke's is increasing 300 mil.
What do you guys think? I mean, right now, let us know in the comments, but right now for me, because I own First Energy, I've owned them for a hell of a long time as well. They did surprise me with a 5% increase. I was writing some call options a little bit on them, made a couple bucks off First Energy. They never obviously were exercised, always were out of the money. Yeah, I'm not doing anything right now with my position, not adding to it right now to any of these three. But if I owned AEP
Mhm.
or if I had multiple utilities and I wanted to consolidate, say if you own Duke or if you own First Energy, you could consider, and you own AEP, consider like, hey, consolidating a little bit.
Yeah, and obviously I own First Energy. I own AEP. I'm not into First Energy. AEP,
Obviously.
yeah, obviously. In 2024, I've added to AEP. I've talked about a lot in this channel. My position's large enough. I joked in the last video. I called it the stubborn Lanny zone, where like you have a large enough position where you can be like, yeah, I'm gonna wait a little bit to add more. AEP is officially at that for me. So if it's below 80, I'll consider adding another share or two. But right now at 82, I'm just being stubborn and I'm being Italian. So I'm just not gonna buy them.
Hey, you can be Italian any day of the week, guys. What are you guys doing with utilities? Are you buying utility stock? Are you trying to grab that yield because it's there? Or you guys are saying, hey, I think you can get better prices later. Let us know in the comments below.
If you haven't already, subscribe to the channel, give this video a thumbs up, and remember, if you're not with us, you're
Oh,
against us, Jack.
guys, that was Bert, the Hurt Locker, and Lanny from the Dividend Diplomats over and out.